Ladies and gentlemen with the crypto space, I'm starting to get back into action. I finally have my normal workstation set up, and I blow the opening line. Ladies and gentlemen of the crypto space, we're live on a Wednesday, August 4th at 11:28 a.m. It's good to be back. This is the only place, the only way to properly execute a stream. I need bandwidth, boys and girls, and I got bandwidth. We're going to talk about volatility, uncertainty, contradiction, because I know the vast majority of people that watch me are interested in risk assets. They want assets that are at a price. They're going to go up in price because other people have a demand, an increasing demand for them. You buy early, they buy later for more. And, that's just the way the financial system works. Those who are early, well, capital is transferred from those who are late to those who were early. And that goes into Warren Buffett's ideology. Capital is transferred from those who are from those who are impatient to those who are patient. And there's a whole lot of psychology that goes into interacting with these markets. Now, we're going to pop the charts. We're going to talk about the volatility. Obviously, there's interesting stuff in the crypto space that we'll talk about too. But let's get started. We got a nice stream count today, 14 already in. Today's episode sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Uriah's in the house. Good morning, sir. Good afternoon. Good afternoon for myself. 11:30. Welcome back. Thank you. You need more crypto. Let's talk fast food punks. Well, you guys know me and fast food punks. I talk about buy early and transfer of capital from those who are late to those who are early. The activity is through the roof. This stuff is vertical, and I got a decent set. I swept the floor quite early, and have a couple of punks listed, fast food punks, guys. Guys, this is the most important thing to understand about these types of assets. This is it's not gambling, but this is speculative frenzy. No other way to describe it. I literally listed a punk for 2.25 Ethereum. It's almost $6,000 right now. Just food for thought. This is maximum risk exposure. If you're going to buy something at like 2.25 Ethereum, and someone's probably going to buy this thing, it's the cheapest one listed. I bought really, really, really early, and that's the way the capital transfer is going to go. There's no rules for buying something expecting to sell it to someone for a higher price. That's a speculation. And it's the last thing I'll ever encourage. The entirety of everything I talk about on this stream is risk aversion, and the reason my risk aversion was applied to this particular market, this guy bought this stuff for cheap, and it was a speculative play that it would go viral, and it completely went viral. This thing is exploding like madness. Um, So I historically or recent history, I didn't have much risk on. Lots of stable coins, lots of yield, lots of positions. It's all revenue streams. You guys know how I talk. So I don't have a large Ethereum exposure or Bitcoin exposure, hoping for a 10x or a 100x on some sort of micro cap asset. So this is my little risk exposure. I mean, the total amount of capital I deployed to fast food punks was probably like 3% of the portfolio. I mean, that's, I guess, a relatively decent sized position. Less, 1%. About less than. I put in like 15 grand, which is a small amount of my portfolio percentage wise. And that's really the only risk on I had. So, I mean, it's paying off for myself. And that's it. The last thing I ever want to do is encourage people to buy at large valuations and become a bag holder. So I know you want to talk about it, need more crypto, but I don't know. I'll show you guys my little bag for the fun of it if it loads. I have a lot of NFTs. I bought a lot last year. Gods Unchained. Um, I bought those the curved llamas. I bought a bunch of those, probably just for historic posterity purposes. But I bought all these zombies. I just bought them all. I was like, "You gonna sell them to me for?" They I got the average price for my zombies was a half an Ethereum. And I got this ape guy, and I got one of these alien guys, and we'll see what happens. I bought a bunch of these polymorphs too, and some random stuff here and there. Mostly the Gods Unchained. I love them because they have utility and they have purpose and function, and you can play with them, and it's quite enjoyable. I bought them to play with them, not necessarily at all for speculative purposes. Reminds me of Magic the Gathering, so I have a whole lot of Gods Unchained at this point. But I, I'm the zombie lord at this point. Chris, welcome back. Thank you. Wave, back in the house. You need more crypto. Point one FF punks 5 curve. What 0.01 Ethereum divide. I don't understand what you're trying to say, but I know you into the fast food punks right now, and obviously I am too. But let's not totally get off base with proper ideology and how to attack the crypto space. It's all about revenue streams, boys and girls, and you deploy a little bit of capital here and there, 1%, 2%, 3% of the portfolio to risk assets. And for me, the risk assets were these NFTs at this point. Um, you know, what I started the stream with was the DXY, and I wanted to talk a little bit about macro financials and uncertainty because if the system experiences a risk-off event, yeah, a lot of that speculative price action in the NFT space and broadly the crypto space is going to go south really quickly. And we have a very big contradiction going on. I do have curve up, but let's take a look at the equities markets. Let's take a look at futures. Folks would say it's a topping pattern, but it's up and it's not breaking down. And look at all the support. Look at these guppies. It would have to really be like a big risk off event to push through all that support. There's just so much capital flowing around in the equities markets. But obviously, it's so it's it's so distorted. This is such a ridiculous chart. But so look at the contradiction. So securities markets are up. Bonds are below the 200 EMA on the daily. Let's go to the weekly. I mean, that's some serious resistance for interest rates to break through. So there's just a lot of buying pressure on bonds, and this is the 10-year. And if you have a risk-off event, everyone plows capital into bonds, and then the risk off becomes the risk on. And as you can see here, this is a prime example of how risk on they become. 1, 2, 3 weeks. 3 weeks was I don't have the percent up, but this was a 78% rip to the upside for the 10-year bond in 3 weeks' time. So, $100,000, you turn into $178,000 in 3 weeks. $1 million, a quick $780,000 in 3 weeks. So bonds during which historically been for the last 12 years, transitory risk-off events, risk-off impulses, or deflationary impulses, bonds turn into risk-on assets. And you had to sell it quick because they quickly got sold. You could see the bounce back 1 week later with this wick, and then it went big green, 0.8. I mean, that's a big drop. That's 50% loss in value in a week. More, 60% loss in value in a week for the 10-year. So this is a nice, this is exactly why historically portfolios were 60-40, 60% risk on, 40% bonds. And, I don't know if we're there, and I wouldn't be 40% bonds, and that's because of how heavily distorted the markets are. And interventionism is prevalent. So what does that mean? Even the Fed literally said Why are people buying bonds with the inflation pressures on the market? And then you have the contrarian ideologists that talk about how inflation is deflationary. And do we really have inflation or do we really have deflation? All I know is, from my, my age and my knowledge and my experience, it just tells me nobody 100% knows what the hell is going on and what the hell is going to happen. And what that tells me is volatility. It's either going to go up big or it's going to go down big. And if it goes down big, the interventionists are going to step in and completely control the market. They'll own the yield curve. They'll issue their break the debt ceiling, issue their treasuries. The Fed will buy them. They'll monetize the debt. They'll work around commercial banking system money creation processes, which they want to do anyway. They want their CBDCs. They want their capital controls. And why would they stop? Why would interventionism stop? So, my personal opinion is deflationary impulses will be transitory, and we'll see maybe a month, 2 months of 50% and 75% drawdown in the security space or even the crypto space, and then it just goes back up as they want to control the market. So that's bonds and the dollar. This is interesting because, in my opinion, the dollar really reduces, from a forex market perspective, to the relative velocity of the printing press. And we're seeing less and less correlation between dollar bullishness and bearishness in risk assets. If you saw a rip like this or a bounce like this over 200 EMA, historically, that would be one heck of a signal to take risk off the table in the securities markets and the crypto markets. But that clearly is not occurring right now. And this is a heck of a candle on the daily. It bounced right off the bottom of the guppies on the daily, and it's above the 200 EMA. And it looks like it's currently finding resistance below the guppies, which is quite interesting. And this is just screams volatility extreme. And then you go over to Bitcoin, and it looks freaking ridiculous. And Ethereum, USDT, they both look ridiculous. This is approaching the 0.382, and I took the fib retrace literally from the highs to 2020 lows, which is obviously our correction. Damn, it was really $62 in March 2020. Damn, $95. So I see that 0.382 on this particular fib retrace as being a heck of a line to breach. I mean, you get over these resistances, these price action resistances, 2,900, you get back to 3,000, and that's quite a meaningful price range. And Bitcoin bounced off the top of the guppies on the daily. It's back above the 200 EMA, which is reassuring. If you zoom out, let's go out to the weekly for a second and look where we are in the fib retrace. So where did I take the top and the bottom of the fib from? Did I take it from March? No. Yeah, I think I did. Yeah, I took it from the March lows. So it got rejected, as you can see here, the 0.382. But if it gets above that, you talk, what is that, 42, 41.5. If we get above 41.5 and we turn like a previous resistance into support, a breakout previous resistance, flip support, and then a higher high, trifecta bullish confluence, that's going to look really good on the chart. I don't know. Crypto charts look really good to me. Ethereum, Bitcoin, dollars screaming bullish. Bonds look like they want to rip through the stratosphere, even though the Fed's saying stop buying bonds. When in reality, they really control the market. They don't want bond yields going negative, and they can't afford bond yields going up. So they kind of are forced to really own the bond market. Stock, catch 22. And the dollar screams to 110, and that's going to destroy international currencies. So the Fed really doesn't want that either. So they kind of want like the dollar they need to weaken the dollar because of the debt obligations. They need to keep interest rates low because of the debt obligations, and they're fighting all these market forces. because they're intervening in the system and not letting the system play out naturally or organically. And that's quite disturbing, but it's also real, and that's what they're doing. And we're seeing this immense volatility and contradictory signals, dollar bullishness and crypto charts looking decent. Look at that weekly. Look at that weekly candle right there above the guppies, finding support. That's really nice to see. So crypto bullishness along with dollar bullishness. And obviously with Ethereum, we have EIP 1559 today. This holds above the 200 EMA on the daily. That looks really good. Previous test failed. Previous test, this current test looks decent. Breached, but it was rejected off the 382. Anyway, let's see what's going on in the comments. Lisa, hi Noah, welcome back. 21 hours and counting until Ethereum London upgrade goes live. Any thoughts looking forward into 2022 and beyond? And that's really where we are with regard to the macro financials, the dollar bullishness, the bond bullishness. And they want to control those markets. They don't understand the crypto space, so they have no control over it. And if they did understand it, they'd probably try and intervene in normal market, organic market function also. In the end, this comes down to everything we always talk about: portfolio construction, hedging, the hedges of hedges, and stuff like that. I have 10 years. I have, and I've talked to you guys about T-bills and 3-month treasuries and converting like checking account balance to T-bills. So that's what banks do. Banks sell your deposits the second they get them into T-bills. So why the hell would I give it to them to do when I could do it myself and manage my capital myself without the need for a banking institution to do it for me, because they don't give me jack shit for it. So going into 2022, I want to hold a diverse portfolio of assets, probably that allow me to express myself the best. And the way I express myself is as a technologist and as an engineer. And I align myself with the values, the ethics, the morals, the awesomeness of the Ethereum space and what Bitcoin represents. And, obviously in the crypto space, there's a big divide between the Bitcoin maximalists and Ethereum maximalists and speculative, various speculative assets. And I don't align myself with maximalism. I don't align myself with maximalism. Bitcoin is meaningful. Ethereum is cool. Bitcoin has the potential to be cool too, but I think they push it a little too far. It's just not as cool technologically as Ethereum. It's just not as powerful. It's meaningful from a historic standpoint as disinflationary asset, and it's simpler than Ethereum. So they all have their roles, and this goes into how you express yourself with regard to, and you do that vis-a-vis portfolio balance. How much Bitcoin do you have? How much Ethereum do you have? How many altcoins do you have? What types of altcoins? What are the monetary policies of the altcoins that you have? Anyway, you need more crypto. 0.01 per. Oh yeah, that's right. So I've got a bunch of fast food punks at 0.01, and I swept the floor of all those zombies. That's right. Big deal. And turn it into curve. That's cool. Good stuff, my man. CRX, what's up, Noah? Happy to finally catch a live stream. Yeah, it's good to be back in action. It's nice to have my normal work environment where I could actually, do things predictably based on the way I've done things over the last year and a half. Chris, what do you do with your EPS airdrops from Convex? I'm just putting them back into the protocol. What I get is pretty minimal. Yeah, it's, a good thing to do is accumulate cash, and for me, cash GUSD is the least risky of all stable coins. Not that I really think they're all extremely risky, other than from a regulatory standpoint, and it's an entire conversation unto itself. But the stable coins that I'm exposed to right now are Frax and GUSD. I find Frax quite interesting. There's been a lot of forks and a lot of partially collateralized algorithmic stablecoins over the last year. And what was it? Titan and Iron Finance obviously didn't do so well. But their code was based on Frax. Anyone that's ever done a partially collateralized algorithmic stablecoin has been basing it off of the Frax code. So Frax has done well. As I tell you guys always, I'm never early and never late. I don't want to be early. And, we see what happened with Popsicle, obviously. And, my sympathies and empathies go out to folks that deploy capital to those protocols. And I didn't. My vast majority of capital is still on curve, particularly convex. I have borrowed some Tether from Aave. We're using Bitcoin and Ethereum as collateral, and that's deposited right now, denominated in Frax. Frax is paired with USDC and Uniswap V3, and some of the debt is GUSD. GUSD is paired with MUSD. MUSD is awesome, by the way. I think MStable has a lot of work to do. There's complexities in the protocol, which they talk about in the Discord, but MUSD substantially spreads the risk of any one particular stablecoin because it's a basket of stablecoins. Risk mitigation. I love to minimize risk, or at least consider it and try and, position myself well for it. So if any stablecoin has an issue, MUSD minimizes the effect of those issues. Are you into the Terra system at all? What are your opinions on it? CRX? Opportunity cost? Right now, there's too much opportunity cost for me. It's not lucrative enough. And the bottom line is if yields keep dropping, which they are because of dilution, it may become that the opportunity cost is in my current positions. There's no allegiance to your current positions, folks. And, we've gone through a couple of different phases of strategy and how we've deployed capital over the last couple of months. And it's much easier seen in our Discord forum. We were big into Matic and Polygon for a while, and that was really cool. But then, yield dried up. The protocols changed. Liquidity poured in. Matic had a serious spike. I was following it from a technical perspective. So I was clearly, a buy low, sell high opportunity, which I'm not really in right now on anything. I don't have anything that I'm really following the charts. I follow the charts from a macro perspective to understand the state of the system as a whole, but I'm not following something looking for a breakout. Not breakout hunting at the moment, but that's what we were doing at the time for Matic because there was very clear signs, and for folks that were around when we did the Matic play, we did pretty good. We did pretty good on that one. So there's no allegiance to our positions. We do our risk analysis. We want to minimize our risk. That's what I encourage everyone to do. We're constantly doing an opportunity cost assessment. And if something is a better opportunity, you migrate capital. And what do I do for you guys on the stream? I literally just tell you guys what I'm doing and what I'm thinking about. And, change is inevitable. The way you deploy capital needs to change. Now, don't change too much. You have to also have conviction. And you don't want to just put a stake in, like a Uni V3 pool for like 15 minutes or an hour or a day. You have to have a little bit longer of a time horizon, and that really comes with experience. And I myself have had a lack of conviction or years past, and it's not easy to really find conviction. That's not something that's easily attained, and it just comes with being exposed to the market for a long time, and your experience will grow, and you'll find it, and you'll be able to sit in positions. You'll be able to sit in positions for a fair amount of time. So right now, look, I have a lot of CRV locked as VECRV for probably 3 years left. I did a 4-year lock. I locked FXS for 4 years, probably about 50 grand worth of XSS. 4 years, can you imagine? Talk about conviction. So there you go. But that's cranking out capital, 48%. This is diluted. When I got in, it was around 80%. But the FXS is a deflationary asset. If you go into the documentation, you'll see FXS 1559. It's their protocol that creates a deflationary pressure on circulating supply, which is really cool. But it's a revenue generator. It builds, and that's nice. Nothing to complain about. Capital is capital. It's a 741, and then I have the staking. By the way, I might go back to Polygon soon because this is really cool. Frax MUSD. Oh, MUSD. You guys know what I've been saying, and that's really cool. FXS and MTA incentivized. Yeah. Let's take a look at what M Stable's doing for me. So incentivized yields got diluted recently. That's probably because, well, liquidity poured in. People want to be exposed to particularly GUSD in this instance. So 20%. This was up at 30% for a bit. Obviously, I saw it at like 18 or 17, and liquidity obviously came out. Base APY is decent. Base APY was like 30% for like a day or two. That was pretty cool. But I love this because this GUSD, which is you could send GUSD to Gemini anytime for dollars, and their policy or statement is that it's 1-to-1 with dollars in a bank account. Very simple. GUSD is perfect on and off ramp. Don't forget to tab if you're taking capital out. Don't forget to put money aside to pay the taxes on any capital gains you take out to a bank account. But MUSD is obviously what I talked about is a risk considerate stablecoin. It's a basket of currencies. If you go over to the save, you'll see, and you actually get incentivized returns just taking a stablecoin and putting it into MUSD. And if you have a decent MTA stake, you'll get up to 21% in your MUSD. But SUSD, DAI, USDC, USDT, AOUSD, that's pretty cool. So I get a kick out of this. So what I like, as I said, I'm never early, never late. M Stable's been around since DeFi summer 2020. And Frax is probably end of the summer, probably September, October-ish. So not early and not late. Gotta wait for the protocol to prove themselves a bit. Probably the only protocol that I got in with the quickness was Convex as a derivative asset of Curve, and that's proven out quite well. I guess I took a bit of an increase or applied a bit of an increased risk profile to what I'm doing to the portfolio by getting in there, but it's just such a very lucrative protocol, incredible derivative asset. Let's see what's going on. Chris, what do you do? So the EPS, I usually convert to cash, just cash, and then GUSD. I'll throw it in M stable at this point. Have you talked on the convex voting news? Yeah, that's awesome. I haven't had a good stream in a couple of days, but the convex voting news is awesome. CVX is powerful. It has a lot of voting potential. Now, FTX is still dumping CVX, and price doesn't look so hot. So I haven't been accumulating CVX. I mean, it's down 85% from highs. It's pretty brutal. Obviously, I looked at the price recently. Was it 319? I saw this thing at $20. I had a bunch of $20. So it's not very price appreciative. There's a lot of sell pressure because of FTX's dumpage. But it is what it is, and you know, we've seen a lot of accounts over the last couple of weeks that have large FTX CVX positions. It's not something I'm currently exposed to in great quantity. Obviously, I have a large amount of CVX CRV, which is liquid, VE-CRV, which is awesome, which is quite volatile unto itself. 5, 10, 15% price swings are to be expected. But the yield, the denomination of the yield is what catches my fancy. The returns in CRV, CVX, and 3 curve. So 3 curve is cash. Convert that to GUSD, you got more dollars. So that's something that is quite enticing to me, where the emissions are separate and they have different profiles, and I like that. Now I don't really, get a little sense that maybe there's a little bit of opportunity cost emerging with the size of the position I have in CVX CRV. And as you guys know, especially on Discord, I reduced my CVX or CVX CRV exposure, and I eliminated the vast majority of my CVX exposure. So, but it's still the largest position in the portfolio. Um, and as you get it, a lot of opportunity cost assessment is gut instinct, and CVX dropped to like 30 something percent yield, and these are all major considerations. And there comes a time when you have to have conviction to stay in a position, or when you have conviction to actually move capital or reduce capital, or adjust position sizing to best express the way you see your portfolio capitalizing on opportunity. So, what was it? 2 weeks ago was my adjustment to the convex positions, the near elimination of CVX and the reduction of CVX CRV exposure. Um, Here, let's pull up convex. Take a look at convex and see what it's doing. Mix is in the house. Always a pleasure. CRX, APY on stables is pretty crazy on anchors. Soon you can deposit BF and take out a loan, which you get 20 or 30%. Sure, but if I'm getting 55, 60% on Frax, or if I'm getting 30% on GUSD, literally just raw stable coins that are 1-to-1 with dollars. So that's why. And obviously with Anchor, it's a completely other chain. It's a whole other chain. And that's something. Oh, the alien. Who's getting this? Someone's getting the Wendy's alien. Oh, I wanted that thing. Here's this thing. Let's pull it up. How much is it going for? Tell me it's going for like 9 Ethereum. Oh, all right. I put a bid in there. Wow. That is a rare fast food punk. That's the rare. That's the big rare. All right. That's cool. Anyway, totally sidetracked. I want to wrap this stream up. I want to take a look at what's going on in this crazy NFT madness, which is nonstop at this point. But always be considerate of risk. You got to always reevaluate opportunity cost. And you got to remember that the global financial system is sitting on an edge, teetering on a cliff. Keep your eye on I don't have it up anymore, but the DXY and 10-year yields, and if the yields collapse, and then obviously we have to consider interventionism is likely inevitable. So what's the point? So expand your time horizon, and they're just going to keep intervening in the market, and they're going to own the bond market. They can't let the dollar's value on the forex exchanges get out of control because that crushes international currencies, and that's not good. So but we can't bank on them being completely in control. Can they really control everything? And they fail, obviously, temporarily, like in March. They failed, but then they pulled the markets back together. I don't know. Dark, did you get into M stable pool, or is it just using safe function on the site? Yeah, GUSD, MUSD pool. You need more crypto. Get it? No, I don't have enough capital for that right now. Mix swap GUSD is liquid. Them stable then. GUSD is very liquid because it's on Curve. There's a lot of GUSD and 3 pool on Curve. So GUSD is extremely liquid stablecoin. It's a wonderful fiat on and off ramp. All right, boys, let's wrap it up. 53 people in the stream, 20 likes. As always, we could do better. Wednesday, August 4th, 12:01 p.m. Thank you guys for coming. It's good to be back. I'll be back on track, 11:30 Eastern Standard Time. As always, the Discord forum is the after party. We're always there. And tell everyone to subscribe, and I will see you again tomorrow. Peace.